Let's give you the markets update now, and the local trade poised for more gains. This is after gains for a second day were experienced yesterday, reaching the best level in 3 weeks. Global markets cheering after a further sign of easing of that U.S. inflation. Bianca Botes is Executive Director at Citadel Global. She joins us now for a quick update on how the markets are performing in early trade. Bianca, good morning to you. Let's start with the rand strengthening to its best level against the dollar in more than 3 months. Talk us through just some of the factors influencing those gains. Add to that the question around whether this can be sustained given the load shedding that's back at stage 6.
Good morning to you and your viewers at home. I think it comes as a welcome relief that the rand is actually trading below the 18 rand mark at the moment. And while load shedding has a detrimental impact on the local economy, the current movement in the market is actually driven by a global backdrop. As you mentioned, a relief in US inflation that's actually pivoted market into anticipating that the US is close to the end of their rate hiking cycle. And that's actually stimulated some risk appetite in the market and contributed to dollar weakness. So the rand strength we are currently seeing is not really rand strength, it's more dollar weakness driven by that development in the US.
All right. Let's talk commodities then. Oil prices set to register their third consecutive weekly gain for the first time since April. Is that forecast still in range?
It remains in range, and what is quite interesting is that this move in the oil price is actually driven by strong anticipated future demand. So nowhere is anyone going, demand has actually increased significantly now, or China has actually started producing. It's actually based on anticipated forecasted demand for 2024. And we've also seen actually China's crude imports reached a 3-year high, indicating that robust demand remains from China, even as the economic slowdown plagues the market.
Let's talk gold, holding steady at $1,961 an ounce in early trade. What's driving gains there?
This is also a U.S. inflation story, with markets positioning for that normalization in U.S. interest and potentially even a cut in U.S. interest rates towards the beginning of next year. And that actually reduces the opportunity cost of holding gold. So you've actually just seen an increase in demand due to that anticipated normalization in interest.
Yeah, let's conclude with South Africa's agricultural trade surplus, which is up 9% year on year in the first quarter. Some good news after a rough start to the year, Bianca, regarding the production and exports.
Absolutely, and I think this is quite an interesting number because, as you just mentioned, it comes across as a very positive number, and one would be inclined to think that this was attributed to a rise in exports, but it was actually a decrease in imports. South Africa's predominant imports is centered around wheat, rice, palm oil, sunflower, and poultry, and this decline in the import bill is attributed to relatively lower agricultural commodity prices across that range of goods than a year ago.
Bianca Botes, thank you very much for that market update. She is the Executive Director at Citadel Global.